morning, traders. I'm Dennis Dick, and this is Premarket Info. Apple takes a bit of a breather there yesterday, pulling back just a few points and a little bit quieter trading range. Deere and Salesforce.com report earnings. Hewlett-Packard and Best Buy, we're going to break down the aftermath, also talk about problems with dividend reinvestment programs. And we're going to take a technical look at some of your retailers heading into Black Friday. First, let's start with Apple. Obviously, Apple had a heck of a run the last couple of days since it made this bottom in the 506 area. Stock had a nice gap and go 2 days ago, and then yesterday took a breather, had a quiet inside, or when it wasn't quite an inside day, it did make a new high of 572, but kind of a quiet session for the most part, just trending in the 555, 565 area for most of the day. I think this is healthy. Obviously, a stock that's had a 60-point move is entitled to a breather, so everybody who's saying, oh, the rally is over and the top of the rally is in, I don't think so yet. I think the stock, as long as it stays above 550, still looks good for the bulls. I think you will see some quiet holiday trade here. Obviously, Thanksgiving tomorrow, going to be a little bit quieter. Wouldn't surprise me if we had an inside day. High yesterday was 571.95, low was 554.58. We are trading right in the middle at 562.75. So it wouldn't surprise me if we did have an inside day. We do have a couple earnings stocks here I want to focus on this morning. Deere reported earnings, $1.75 against estimates of $1.88, so they did disappoint, and the stock is drifting down here in the pre-market. It's near the lows right now this session, trading at 82.91, so down over 3 points here. Disappointing earnings from Deere, and the street obviously not happy. Got to keep an eye here though. $83 was the low on the 9th. We are right there right now. If it doesn't find support here, it starts to get scary below there. I'm hoping this $83 area can kind of hold, because if you start to break below there, you had a couple lows here in the 82 area, but really there's not a heck of a lot of support until you start getting down to the $80 area. Now, I don't think Deere is going to get back another 3 points. Just saying it's hard to make a trade in here because there's not a lot of reference points. So you have a nice reference point right around this $83 number, and then it starts to open up. Salesforce.com also reported earnings. Initially sold off. They had 33 cents against estimates of 32 cents. The stock initially spiked down into the 139s handle on the initial report. 139.08 is where it has found some support here from the last few trading sessions. Made a nice round bottom, and the stock has come back nicely now, trading actually above 150. I like that. I hope the stock can get above this high that we had back here on the 24th of October, which was 150, 115, because then it really starts to open up. So above 150, I'm starting to like this stock. If it can move up, maybe we can go and retest the high from October 16th, a 155.67. Salesforce.com is usually a wild one, so don't be surprised if the stock can move up 5-6 points in a single trading session. Want to highlight a few stocks here heading into Black Friday. Obviously, some of your retailers could potentially have run-ups here today. This is the last trading day before Black Friday, and keep in mind, stocks like Target are opening up for Thursday night. So some of these stocks are actually opening up on Thanksgiving evening. Target and Walmart are two of them that are doing that. Target hasn't had any trades here this morning, but has been moving up here the last few trading sessions, trading near the upper end of the range from the last couple of weeks. Obviously, we start to get in a run up, and we start to run up ahead of this. The whole 64 area is going to provide some resistance. Walmart, similar story, bottomed a few days ago here in the whole 68 area, kind of forming a nice bottom, had a nice move up the last couple of days. I'd love to see it start to get above the 69.69 high that we had on the gap down day on November 15th after they reported the disappointing earnings. If the stock can start to break above that, we obviously have a gap area. 70 is a big psychological number, so I wouldn't be surprised if you had an institution or two kicking around there. Still a buck away from there, though I don't think we're going to see that high today. But like I said, sometimes these retailers do run up ahead of the Black Friday. Kohl's is another retailer I want to talk about, putting in a nice bottom just like the Walmart. You can almost say it had this double bottom, this 50, 70, 50, 69 area where it just from a couple trading sessions ago. And then you had this run up here. We've run up to 52.35, closed at 52.14. Stock can get above yesterday's high of 52.35. It is opening up. There's not a heck of a lot of resistance until we get to the high on the 8th, which was 53.38. So you really have a dollar of air here from 52 and a quarter to 53.38. Again, remember that they could run up ahead of the Black Friday sales. Sears Holdings, another one. This stock has been ugly, though. I'm not in love with this company, but you got to respect that we are going again into Black Friday, and sometimes these stocks can move up. So I'm on 49.49 is where it closed. The high yesterday was 50.29. If it can get above that high, obviously it's all air pretty much everywhere in the stock above there because it had the huge move down from the $55 area on November the 16th. So if it can start to move back up, it can start to get a little bit of a rally going. I don't think you're going to see that $55 area or anything, but it could move up a buck or two just ahead of the Black Friday sales. Now keep in mind they don't always move up ahead of it. Sometimes these are crowded trades, other people anticipating it. So if you're not seeing a little bit of strength off the hop, I'd maybe get nervous with that play, but it could work. It could work out. Macy's, another one. Again, same story. A lot of these retailers put in bottoms a few days ago, and they have been running up for the past couple of sessions. Is the Black Friday sales already priced in, and the Black Friday move already priced in? Possibly. But you've got to respect that this stock has been pretty strong here the last few days, and could have another update in pretty much holiday trade here today. 40.77 is where it closed. Got to respect the high that we put in on November the 7th, which was 41.98. I would say if it gets up to there, you probably find some pretty significant resistance in that whole, call it $42 area. Another stock I want to highlight is Johnson & Johnson. Here's one that actually has it goes ex-dividend on Friday, which is interesting. Often stocks do run up ahead of their ex-dividend date. So I want to keep that stock in mind here today. 69.43 or 69.67 is where the stock closed. Obviously 70 is a big psychological number for this stock, and you had a couple of highs just above 70 in the $70.11 area. But I wouldn't be surprised again ahead of the ex-dividend date, goes ex-dividend for 61 cents if it gets a little bit of a run-up into that ex-dividend date today. Let's talk about Hewlett-Packard and Best Buy. Obviously, both of these stocks, terrible days yesterday. Both of these stocks making new 10-year lows. Starting with Hewlett-Packard, Jim Chanos is out, and he's not saying anything good about the company here this morning either. He remains bearish the stock. It's hard to get bullish the stock. The business models are broken on these things. From a valuation perspective, you can say, oh, it looks attractive. But both of these stocks have been value traps for the last year and may continue to be value traps. So who knows where the bottom is? Do I think these companies are going to zero? No. But I do think it could be more pain in store for the longs. It's very difficult to value companies when sales are starting to decline, earnings are starting to decline, and the business models are not looking good. Both of these companies need to reinvent themselves. That's why I look at, and I wrote an article yesterday, if you look on the site, on dividend reinvestment programs. You have to be very careful with these programs. Companies offer them where you can automatically reinvest your dividends into the companies, and some brokerage houses actually put them on your entire account. So these work when you find companies that stand the test of time. These don't work when you find companies or when companies that don't stand the test of time. So it's very difficult to find those companies that just last for years. Like when you're doing a dividend reinvestment program, obviously you're looking towards retirement. You're looking at possibly, and we have a lot of longer term listeners on the show. So not focusing on trades here, but just focusing on people that are just putting in and reinvesting their dividends. You want to make sure you're picking companies that you think are going to be around. Obviously, I said Hewlett-Packard, I think still going to be around, but if you were investing and reinvesting your dividends for the last 10 years in Hewlett-Packard, you're significantly down on your investment. But if you were taking your dividend checks and banking them, you actually recouped a lot because Hewlett Packard and both Best Buy have had nice yields here for quite some time. So you probably would have had a lot of your initial investment back out if you had been just taking those dividends and reinvesting them in other companies. It's kind of a nice way to naturally diversify your portfolio by taking the dividends and not reinvesting them. So I've never been a fan of DRIPs. They do work though on companies that do stand the test of time. But if you look at a company like Eastman Kodak that went bankrupt earlier this year and you were doing a dividend reinvestment program on that, you lost everything. However, if you were taking the checks out, the dividend checks out for the last 50 years, you made a lot of money on it. So that's just something to think about when you're doing your dividend reinvestment program or if you're deciding whether to participate in them or not. Overall market thoughts here. Obviously, we've come into this area, this 1388 area that we were talking about on the show yesterday where we thought we might find resistance. It's been a heck of a run up for the last 3 or 4 trading sessions since bottoming at 1340 on Friday. We're now trading at 1387. Made a high overnight at 1389.25. I do expect quiet holiday trade here today, so I wouldn't be surprised if this resistance area did hold. Call the whole area 1390. This is where we had support back in August and early September, so this is where we are finding resistance now. We need to, for me to really start getting and continue to be bullish this market, we need to start getting above the 1400 area again. But I think you're going to find some sellers here who accumulated positions in the past, and obviously we're picking bottoms here. These sellers can now come in and break even on their trades. Lots of traders use their initial position as a reference point, and when they can come back and they were just under significant heat, they say, oh, get me out of the trade. And that's why I think old support can sometimes become new resistance, which is what we are starting to see here the last couple of days. So it wouldn't surprise me if this whole 1389 area continues to provide some resistance. That's our show for today, folks. Joel will be back with us on Friday. Have a great Thanksgiving, and we'll talk to you then.